Hooty hoo, all my stock market gamblers. Welcome today. It's Wednesday, October 6th. I'm Tall Mike. I'm so glad you're here today. What's going on in the markets today? Well, we started off really bad. We were down again about 500 points, but I think we cut that in half already. We're coming back up now. Look at this is a trader's market. I don't know if you picture a trend here, but you're down 500 points one day, up 500 the next, down the next. It's fun though. I actually love this market because it's volatile. I'm a trader. I'm not really an investor. Well, I'm a trader with the smaller portion of my portfolio. Invest the large one, but a small portion, I like gambling. Now, I talked about the QQQs on Monday. I told you I bought them. I bought the calls going long. Now, by Tuesday, those were up over 100%. What I do, I took them off. When things go up 100%, I recommend you take them off. Okay, now what? Okay, so I took them off yesterday. Now, if I was really smart, I would have bought the puts on the QQQ because the market came down 500 points. But okay, so that market comes down and the VIX goes up. Now, when the VIX goes up, that's fear in the marketplace. And there's a saying in Wall Street, when the VIX is high, it's time to buy. Okay, so the VIX is up, right? So I put that QQQ trade on this morning. Again, I bought calls on the QQQ this morning. So, okay, I'm just watching. I take a break. I go to the bathroom. I come back. It's like 5 minutes later. Those QQQ calls, they already doubled in price. They're up over 100%. What did I do? I took them off. You make 100%. You take them off. Now, what I want to talk to you about is another one that I made 100%. Now, I'm not telling you this to brag. I'm telling you this to teach you about trading. Well, maybe I'm bragging a little bit, but I want to teach you about trading. Now, okay. Now, another trade that made me 100% just in the last day. Now, when I trade, when I gamble, I put options on because they have a lot of volatility. Now, what I wanted to show you first here is the symbol. Okay, the symbol, $BPENER. $BPENER. Take a look at this. Okay, this is the bullish percentage index of the energy sector. Now, when this index reaches 100%, it means everyone's bullish. Everyone's betting that oil's just going to keep going up. That is the time to start thinking about putting some puts on. So yesterday I put these puts on. The puts I put on was in the energy sector. Now the energy sector is the XLE. And I put these puts on and XLE was trading around 56. And sure enough, today it dropped down to 54. Doubled my money in one day again. But when this gets up to 100%, everybody thinks it's going higher. And oil may go higher. I do believe oil's going to reach $100 a barrel eventually. But right now, it's overbought, man. Everything's high. So I took a shot, and it paid off, doubled. Okay, now I'm not saying to do this now. I'm saying just to take a look at this so you know what to look for. Now, what would you do if the $BPENER, what would you do if this was down at 0%? It's at 100% right now. At 0%, everybody would be hating oil. Well, that's where you start to look to put the call options on, to buy the XLE, to buy the energy sector. That's how I trade. I just want to teach you that you can do this. I'm not smarter than you at all. No, I know what to look for, and this is one of the symbols I watch, one of the symbols I look at. And I watch it, and when it gets to 100%, sell. When it gets to 0% or down near 0%, you buy. It's not complicated. Now, does every trade work out? No. Now, some of these YouTubers, every trade works out for them. It's incredible how good they are. They never lose a trade. They'll even tell you that. Look, I lose 30% of my trades, approximately, and I win about 70% of them. And that's good for me. That's good, you know. And not every trade pays 100%, but maybe you make 50%, maybe only 20%. But you hit 70% of your trades, you're doing pretty well. Now, what I want to talk today about is the crazy stuff going on in the economy. Now, there's things. I'm an economics major from way back when I was in school, but economics has changed. Now, it's changed a lot. Now, we're going to talk a little bit about this. Okay, so Janet Yellen, now she's worried about the debt ceiling. Well, apparently you don't need to worry about the debt ceiling because you can print the $1 trillion coin. It's made out of platinum, apparently. You can print a coin worth $1 trillion and solve the debt problem. Well, why just stop at one coin? Let's print 100 of these coins to get 100 trillion so that we can spend 100 trillion. Now, it's funny. Now, these modern monetary theory, we didn't have this when I was in economics school. There was no modern monetary theory. There was no $1 trillion coin that you print out of magic to pay off the debt. We didn't have that. We didn't have this universal basic income. You know, they just started this in California and in Compton, California, of all places, handing out free money again, universal basic income. We didn't have any of this stuff. Now, it's funny, they hand the free money to the poor, and they think that's going to solve the problem. It doesn't solve the problem. You know what it does? It makes the gap between the rich and the poor even wider and wider and wider. The gap keeps getting wider, and you haven't seen nothing yet. The more money they print, the wider that gap's going to get. Now, this is, people like AOC, they just don't get it, I mean, I don't understand why the left, they want you to print the money and hand it out to the poor. When you're printing money out of thin air, you're creating debt that me and you are responsible for. Yes, you give it to the poor, but what do the poor do? Well, they go buy stuff from Amazon. Goes into Jeff Bezos' pocket. Okay, well, that's what you're going to get, this extreme between the rich and the poor, and it's just getting insane out there. Now, there's no shortage of money out there. No, look, they're going to print another $3.5 trillion spending bill. Now, the Biden administration will tell you that this isn't going to cost you a penny, not one penny. We didn't have this in my economics class again. When you print $3.5 trillion, it costs somebody. Oh, no, it's just going to cost the rich people. Just those rich people are going to pay. I don't think it's going to work that way. Look, when you print $3.5 trillion in money and you put it out there in the economy, what happens? That inflation, it takes off, right? Now, don't worry, it's transitory. This inflation is all transitory. Does it feel like it's transitory to you? It doesn't feel that way to me. I think it's going to be with us for years and years and years to come. That inflation's not going anywhere. But when you put that $3.5 trillion out there in the economy, that's a tsunami of money, a tsunami of cash. It has to go somewhere, right? Where does it go? It goes into the stock market, goes into the real estate market. Look at the cryptocurrency market. They're exploding again. Bitcoin's going to 100,000. It's only at 54,000. Hurry up, get in before it gets there. I don't know. It's 100,000. Okay, yeah, you can double your money. That's great. But what risk are you taking on? You're taking on a lot of risk. Bitcoin can drop 80% overnight, but it's going to get 100,000. I believe it's going to hit 100,000. Look, it may hit $1 million, but it's risky. It's risky, right? Okay, so when you get this tsunami of money, all these assets go up. Now, I believe there's going to be a crash eventually. A crash is going to come to the stock market. It's just going to happen. But is the crash, you can crash with going up, right? Well, you either crash the market, which is a deflationary crash, or you have the inflationary crash where you crash the dollar. Look, at the stock market can go, we had 35,000 on the Dow right now. It can get to 100,000 quicker than Bitcoin. They just keep printing the money and put it in there. But that's it's a crack up boom, right? Sure, the market's at 100,000, but your dollars, when you go to the store, don't buy anything. When you go get gas is now $20 a gallon, but hey, don't look at that. Don't look at the economy. Don't look at the economy. Economy might not be doing so well. Look at the stock market. They want you to look there. Look at the real estate market. These are the best of times. The best of times, we're all doing well. We all have money to spend. It's just great. Let's just keep doing it. Let's just keep printing the money. Let's get that $1 trillion coin. $1 trillion coin. A lot of people think it's going to work. That's what's funny to me. I'm a sound money economist. I believe in sound money. I believe when we were on the gold standard that life was better. I believe when the money is backed by gold that it actually worked. Look, once we went off the gold standard, and you can look at it two ways. Maybe we went off it in 1933 under Roosevelt when he made gold illegal for the average American to own. Many forms of gold were illegal. But then in 1971, Nixon, he closed the gold window. You couldn't trade your dollars in for gold. Well, when we were on the gold standard, they couldn't just print the money. They couldn't just print their way out of debt. You can't just solve the debt problem by more debt. That's what they want to do. That's what, Janet Yellen, she's worried about this debt ceiling. That's funny to me, too, because we've raised the debt ceiling like 78 times in the last 50 years. I'm pretty sure they're going to raise it 79 times. Now, am I for them raising the debt ceiling? Absolutely not. I don't want them to print another dollar. If we don't have the money, we don't spend the money. That's the type of government I want. I want to shrink government. I want to shrink them by more than the stock market's going to shrink. Stock market's going to shrink by 80%. I want to shrink the government by 90%. We don't need this big government, in my opinion. That's my opinion now. Other people tell, we need a bigger government. They're so helpful. They're helping all the little people. No, they're not. They're not. They're hurting you. They're hurting you. I don't know if you feel the pain yet. If you don't, you're going to feel the pain. But you can protect yourself. Buy some gold. Buy some silver. Bitcoin? Sure, why not? Buy a little Bitcoin, protect yourself. Okay, I'm Tall Mike. If you like this stuff, give me the thumbs up. You really like it, hit that subscribe button. Let's talk later in the week and let's get out there, do some trading. Find some of these call options. Look at the call options I bought on the Qs this morning. It doesn't take much money. They were as $150, right? And I sold them at like $320. I mean, they doubled in less than an hour. It's exciting, but you got to know what to look for. It can be dangerous. You can lose 100% of your money trading options. And now options, there was a comment down in my comment section, is this a good time to buy options when the volatility is so big? And you know what? It's a terrible time to buy options because the premiums go up as the VIX goes up. As the volatility in the market explodes, so do the premiums on the options. So you're paying a lot for them. But it's a trader's market. When it's going down 500, up 500, it is gambling. I'll be the first to admit that. I am a stock market gambler. Anyways, I rambled a little bit today. Get out there. Have a great Wednesday, everybody. We'll talk again real soon. Bye-bye now.